Welcome to a special edition of Stewart Team Homes Live, bringing you a market update. And today I'm sitting here with Greg Palumbo. Greg is a loan officer with First Federal of Lakewood. Greg and I have known each other now for 15 years at least. Have a lot in common, have a lot of the same interests, and both industry veterans. Myself over 27 and Greg even longer, right? 33 years. So you can't ask us a question that we probably wouldn't be able to answer, maybe a couple times over. But why are we here today? We're here today to talk about refinancing. And Greg, as loan officer, is going to share with you, is today a good time, in June of 21, in this market that we're in, is it a good time to refinance? Has it passed us by? Has it passed you by possibly? Or is it something that you should consider? And if you don't consider the refinancing, why? Maybe you'd be better off purchasing. And I think Greg can share some of that, shed some light on that for you as well. So Greg, what about today's market and today's market rates would make it attractive for a homeowner to refi?
Well, I think one of the big advantages that homeowners that own a home, live in a home, and aren't considering to buy are taking advantage of the increase in value.
Right. So
that's something to look at, that even though you're not out there purchasing a home, the increase in value could have a great effect on your ability to do a refinance now. And a lot of those people that maybe lost some equity back in the late 2000s might have regained that now.
Right.
So that's is it a good time for homeowners? I think you have to have a goal in mind.
Yeah.
A goal of what you want to accomplish with the refinance.
Okay. So with that's a great point that I didn't even take into consideration. I meet with homeowners that are looking to sell all the time, and I'm talking about the equity that they have built up over the past 6 months. It's been incredible, but over the past 2 years, the equity that they've built up has been incredible. Now, these are people that are looking to sell, take the equity that they have gained and place it into a different home, whether they're moving up or they're scaling down. Now, if you have no plans whatsoever of moving your residence and you're fine where you're at, you can pull some money probably out of that house and refinance to a lower rate or take years off of that your mortgage because interest rates remain low. Greg will talk a little bit more about that. Yet the equity that you have built, the appreciation in our Northeast Ohio area, homes have appreciated over 18% in the past 12 months. Let's say the past year and a half to be safe. Certain areas even more. So your house would be, very well could be in a good position to take advantage of the market that we're in. We're in an incredible market, whether you're buying, selling, or sounds like maybe even refinancing.
So let's go back to what are your goals?
Yeah.
And so if you're sitting down and you figuring out, is this a good time? Is this a good time for me to refinance? So the first thing you really need to think about is, how long am I going to be staying in this property?
Okay.
That is when a customer calls me regarding a refinance, that is always the first question I ask. How long are you going to be staying in this property?
And how long does one have to stay, you think?
Well, that all depends on the type of refinance that we end up doing for them.
Okay.
There was a rule of thumb about just a straight rate and term refinance that you should probably stay in that property at least 7 years to recoup the costs that refi is going to cost you.
Okay.
But that there's other types of refinance where maybe that's not as important as how long you stay isn't important as what you're accomplishing.
Okay.
So that's always the first question. And then I always ask, what type of loan do they have? Do they have a conventional loan? Is it a 30-year? Is it a 30-year fixed? Is it a 15? What's that current term on that loan?
Okay. What if it was an FHA loan?
Or the type of loan? Absolutely.
Yeah.
Is it an FHA? Is it a VA? Or is
they
it
all can be refi, right?
Absolutely. Yes.
Yeah. Okay. Are there special considerations for a VA refi? I know there's the
Well,
benefit when they take the initial loan.
If they're going to refi from a VA to another VA, there's a type of loan. It's called an interest rate reduction refinance loan, an IRRRL.
Okay.
And that's
Don't ask me that later.
That is a very good loan for a veteran because there's not very much paperwork involved.
Okay.
And if they're at a high interest rate and go to a lower rate, they can really save a lot of money monthly on that.
Excellent. Good.
You brought up FHA.
Right.
So one thing that I try to do if someone's calling me that currently has an FHA loan on their property, is maybe we can refinance that to a conventional loan.
Okay.
If they're in a FHA that's been originated in the recently, then they're going to have mortgage insurance on that.
Right.
And with the way that property values have gone up in value, there could be a way that we get rid of that PMI for them. If we can put them in a conventional loan and they have a certain equity position, then that PMI can go away. And
so considering the PMI and the equity position that they may have gained in regards to, our current market status, would the 7-year figure maybe not be 7 years? It could be 6, maybe 5?
Correct.
Okay.
Correct.
Okay. Excellent. So tell me a little bit more about, why you think it's a good time or not to refi. And then I'm going to ask you a question is, what does a homeowner need to bring to the table, to refi their house?
Well, again, I'm going to go back to the explosion in value. That's what makes it the best time to refinance. Okay. Because when you have a lot of equity, you can do a lot of things. When your house becomes worth a lot more than it has in the last couple of years, you have a lot of options. You have a lot of different ways that a refinance can be put together.
Okay.
You can go, if I've had buyers call me that are 1 year into their loan that were at a 95 loan to value. And believe it or not, they're refinancing and their loan to value is now good enough to get rid of that PMI that they had.
So that was exactly what I was going to ask. What if they've just bought the house in 2000? Or 2019.
And with those people, I don't feel that it's too detrimental to go back to a 30.
Okay.
Because when you refinance, you're going back to that original term, or right. Unless you're doing a lower term. But if you're just doing a straight rate and term refinance from one 30-year fixed to another, obviously you're going to go back up there. So right. If you're only 1 year in, you're only in year 29 or 28.
Right.
What's really the harm? But if your house has gone up enough in value to get rid of that PMI.
Yep.
That's gonna pay for that refi right there.
Okay.
Especially on the higher priced homes, which again, that over the last few years has really gone up. The average loan amounts in our area.
What is the average loan amount right now?
I'd say it's 180, 185 okay. now. Okay. Whereas, for yourself, for years it was probably in that 150, 155, yep. 160. Yep. Now we're 185, yep. 190.
Yeah, it's amazing with the low interest rates and just favorable terms that are available. What I see in regards to first-time buyers, first-time buyers, home used to be so low, in let's just say the low 100s or below. Now we're seeing first-time buyers, buy up to 3s and the 4s, mm-hmm. which blows my mind. But take that into consideration. I'm thinking, what can I do with my money? Well, if I'm able to refinance and if I can pull equity out with my money, knowing what kind of real estate market we're in, maybe I could take that money and put it in more real estate. And I could buy an investment property to make money on my money in real estate. And then that would make sense.
Absolutely. I've had buyers that have bought investment property. And investment properties do take a little bit more of down payment than owner-occupied right. properties. But they bought those properties, went up enough in value where they could do a cash out refinance to do exactly what you just said, Sean. Yeah. Take that money and invest it into other properties.
Excellent. Oh, good.
And again, it's all tied. It was all tied. Those loans were tied to the fact of how much property values have gone.
Right. So personal motivation, low interest rates, and property values. Now, inflation, anything like those, what could happen at the end of the year, anything, would you suggest anyone jump on this now if you're thinking about it rather than waiting until the end of the year?
I would definitely look into it. would definitely look into it.
Okay.
There's really nothing on the horizon that says interest rates are going to rise dramatically, but again, no one has that crystal ball there to see where they're headed, what's going to happen. But to me, a refinance too is all about leveraging your money, whether it's like we just talked about, an investor that wants to pull some cash out to use again, or money for other things, pay off some high credit card debt. If you're going to buy a vehicle, there's some safety in refinances with a cash out refinance.
Yeah.
Lenders will only let you go to a certain amount, the value of the home.
Okay.
And it leaves some room in there in case property values would slip a little.
Okay.
So,
all right, good. So what would somebody need to do to prepare to, they're going to give you a phone call and they're looking into refinancing. What are you going to tell them? All right, get prepared with this. You need these following docs. You need what?
So it's very similar when you purchase a home. We're looking for W-2s, tax returns for 2 years. We're looking for recent pay stubs. We're looking for recent bank statements. We're also going to look for if it's with us, I can pull the mortgage statement to look at their current loan to see if taxes and insurance are included. We're going to want to see a copy of their declarations page showing their homeowner's insurance. But it's basically the same documents that we get when we're doing a purchase loan.
All right, excellent. And there's no harm in trying, right? You might say no to, or somebody might come to the realization that's just not worth it.
That's the thing I try to do. I try to make sure it's worth what they're going to be paying for it.
Right.
But no, there's no harm in a call, and I'll take those calls, as most lenders will. We'll take those calls and try to dissect that situation, and because they're all going to be different, and come up with a plan that makes sense. Like there's certain things, like I said, I always ask, how long are you going to be in the home? If you have a 30-year loan, how far into it are you? Are you down to 22 years, 23 years? I don't really like to see borrowers going all the way back up to 30. But there's increments in there that they can do. They can do a 25. They can do a 20. They can do a 15. So there's different points there that we can talk about, and we can compute some payments to see how does it compare to their current payment. And the other thing too about, if someone's been in their house for a few years, even as little as 5, chances are that they're at a job where they're going to be making a little bit more, or have increased in salary to cover if the payment's higher. Because one thing, if we are going to go down in term from a 30 to a 15, you can expect a higher payment, unless they were at such a high 30-year fixed rate and have had the loan for so long. Then that's the best of both worlds. You refinance to a lower term, and you have a decrease in payment. When that happens, then it's a huge win.
You hit the lottery.
It's a huge win.
Yeah, the housing lottery. Okay. Is there anything else that you think our audience would need to know about refinancing today?
No, you prepare like you would be purchasing a home. So make sure you have your documents in order. Pull out your old loan documents, so when you do call, you're ready to answer the questions that the loan officer has. A lot of times I start to ask my questions and they say, well, I don't know. So because you don't look at your note and mortgage every day. You do see your statement once a month. So you know what you're paying. Maybe it's auto pay. But you'd be surprised how many people say, I don't know how much my homeowner's insurance is. Or I don't know how much my taxes are. But those are the things that you should get together and know when you're going to have that conversation with the loan officer. Okay.
And how long does it take to close on?
Well, that's a little bit different now. As First Federal of Lakewood, I'll just use us as an example. We are going to give the purchase business preference. So because think about it, there's more people involved there. You may have a selling agent involved, a buying agent involved. You also have a seller and you have a buyer involved. So there's some time constraints there that we're trying to keep to. Refinances, those are going to take a little bit longer. The person's in the house, so there's really not that rush like there is for a purchase loan. So
makes sense.
we're gonna do them as best we can, but they are going to take a tad longer than the purchase deal will.
Yeah, there aren't hard dates on a purchase agreement that you're trying to live by.
Right.
Yeah.
Correct.
Yeah, makes total sense. Well, you have seen First Federal of Lakewood, Greg Palumbo, and his phone number trailing at the bottom here. And of course, Stewart Team Homes, Sean Stewart at 440-299-5100, trailing at the bottom. Feel free to give me a call if you have any interest in buying, selling, or investing in real estate, any real estate questions at all. And you've got Greg Palumbo, who can help you in regards to the world of financing your home and or property or investment, and the refi as well. Okay, well, that's all we have for today. Look forward to speaking with you guys real soon. Take care.